And so that for me, yes, there's lots of things around the supply chain issues that have come up during COVID, but you can't print 20 to 40% of your money in just 2 years and not expect inflationary pressures just to build up to unprecedented levels. I think that there's only two options really for them. They either put up interest rates, but if they do that, they're going to hamper the economy. The economy is running off this crack money, this crazy money that's been pumped into the system. And with that being turned off, we're not just going to have a taper tantrum, but something much worse if interest rates also go up, and that additional burden on businesses. At the same time, if they don't put interest rates up, then the inflationary pressures are going to keep on increasing. And God forbid, we could end up with hyperinflation, or worse, a situation where the economy isn't growing and we have hyperinflation. In other words, they call that stagflation, which is even worse. Either way, I can't see a good outcome out of this. And as you say, yes, if you want to get involved in your own personal goals, then do it now rather than waiting until it's too late.
Hey everybody, this is Robert Kientz with GoldSilverPros.com, and I have a returning guest here today. It is Jason Cozens, the CEO of GlintPay, here to talk about gold and also a special deal that GlintPay has put together from an investor. So Jason, how are you doing today?
I'm great, thank you. It's great to see you again, Robert.
Yeah, great to see you. I know you were in the States for quite a while, traveling around. Now you've got the jet lag coming back to the UK. How was your trip out to the US?
It was fantastic. Yeah, I got to see, I'm out there now once a month for a week because, of course, we've got our US team over there. So I was out overseeing MasterCard processing team on, I think, last Friday, and then our Colorado-based client services and operations and reconciliation team, and then back to New York for some investor relations. But yeah, it was a great trip, really. Thank you very much. It's great to see our US team.
Yeah, I know. I've made that trip before in my consulting days, and it's not easy going that direction to the UK without losing a little bit of sleep. So
no, I know.
Hopefully you catch up on it here in the next few days.
Well, what happens is when you go to the States, you're waking up very, very early and feeling very tired at night. And then what happened was at about day 5, it flipped and I was absolutely fine. And I thought, really, I'm not happy about that because it means I'm going to get the jet lag when I came back to the UK, which of course I did. So my lesson is I need to spend only 5 days in the US a month rather than 7.
I was there, I think, when I went to Holland for 2 weeks, and the first week was a nightmare until I finally adjusted. But anyway, that's travel for you. So I want to talk about gold. Actually, go ahead.
Yeah, I was just saying, when you're having exciting conversations and you're having a good time, of course, the jet lag becomes a secondary thing. So it's of course with COVID and lack of travel, it's been a long time since I saw the team. So we're all really pleased to see each other. Yeah,
no, that's really good. One of the reasons I wanted to have you on the show was to talk about gold. Of course, gold hit 1,900 for only a third time in history last week. It's hovering around it right now as we're recording this. It's in the 1890 range. I think that's a very positive sign for people who have put money into gold. I know that guys have been investing in you. What's it look like for you the last few months as we've had this nice little run up?
Well, actually, I think what's really interesting is what's happened over the last year as inflation's increased slowly but surely over the last 12 months, of reaching eventually 7.5% in the States, which is pretty shocking, isn't it? It's just terrible, really, 7.5%. And if you actually look at the CPI basket that they used to define inflation in the 1980s, I think it's more like 14%. We're all feeling it, aren't we? In our wallets, we're all experiencing it. God forbid you want to extend your house, timber's up even much more than 14%. And what's really interesting when we're looking at the statistics of our existing customers, so these are customers who already have accounts, you can see that they have steadily increased their positions in gold over the last 12 months. And as an average across all of our customer base, they've increased their holdings by 30%. So I'm not talking about the value in which their gold holdings have gone up. I'm talking about their investment. The amount of grams they've got in their accounts has gone up 30%. So you can see that certainly, obviously, our customers really see gold as that inflation hedge. But then, of course, you then come to situations that have unfolded over the last couple of months around, for instance, geopolitical turmoil with Russia, and you can start to see a lot more interest in gold. And to be honest, I'm surprised it hasn't increased more. Although I'm not an analyst, but the analysts do tell me that it's kind of starting to build up quite a bit of tension and pressure in the upward direction. So who knows? But I always say to my clients and my friends and everybody I'm talking to, really, that gold, it's not an investment. Let's stop thinking about that. Gold is money and nothing else, as JP Morgan said. And it's just a store of value. And I don't actually want it to go up super high, super fast, and then drop down really low. I want it to be steadily increasing against the dollar as the dollar devalues. And we all know that, of course, depending on how you've calculated the amount of dollars that are in existence, between 20 and 40% of all dollars in existence have been created in the last 2 years. And that's really shocking. And I don't think we've even seen the pressures of that coming through into the price of gold yet. And then, of course, you have the geopolitical tensions, which just, gold gives you the reliability that nothing else gives in terms of money. It can't go to zero. It's there, it's steady, it has been for thousands of years. And with Glint's technology, you can use it as money, you can use it as everyday money, and as you would with US dollars, but obviously with that reliability at the back of it.
Yeah, talking about prices, I think we've had 2 consecutive months of over 7% inflation in the US. I agree with you. Looking at the 1980s number, we're probably double that, between 14 and 15. And what I've seen locally is just prices have really gone up. I went out, to get my usual Sunday afternoon wings yesterday, and the prices had basically, I looked at the prices for them, they had doubled basically what they were 2 years ago. And I was like, wow, you know what, all this money I'm spending, I could be saving going to the grocery store. So I went to my local grocery store right after, and everything's up there. So it's like, it doesn't matter what you do, even if you try to be frugal, food prices are going up. And, a lot of people here in the US have a lot of sensitivity to that because they don't have a huge amount of savings. And it really cripples their ability when you're paying more for food and gas now, which I think is up over $3 US per gallon. In Texas, it's usually, $2 to $2.25. All these prices going up really hampers people's ability to make ends meet at the end of the month. But if you had gold and you had it stored at GlintPay and you had your card, gold has been moving up relative to inflation pretty strong, basically since 2016. So you would have preserved most of your purchasing power. And, you could use your debit card in the grocery store, in the restaurant, whatever, and you would get the same value. But for people who haven't done that and they're just paying cash or their regular credit card, their bank account, they don't have that protection of gold. And, I really appreciate the fact that you guys have built the product you built, because it allows me the ability, to have the same purchasing powers when I opened my account with Glint a couple of years ago. And that's been, a really big feature for me. And that's why I like using you guys. Yeah.
And I think you've had a hit on something, is that you've got to get onto your own personal gold standard sooner rather than later, because it only works when you've benefited from the gains. There's no point in waiting to get involved in gold when it's hit a super high peak like it did during the first year of the pandemic. You want to be in gold, using it as money on your own personal gold standard with Glint, something like Glint, and being able to use it as money whenever you want to. Then you've just got a really good feeling. And then if it just corrects a bit, then so what? Generally speaking, you're still capital gain positive. Of course, the value of gold does go up and down. So, there is an element of risk there. So you've got to think about that a little bit. But generally speaking, as we know, for thousands of years, it's beaten inflation hands down. And as I keep saying to people, the reason I got into Glint and the reason I felt like I needed to develop a solution such as Glint was because the shocking reality or realization that, the dollar has lost more than 80% of its purchasing power in my lifetime. Let's just say that again. 80% of its purchasing power in my lifetime. And that was before this big bout of inflation, which I don't see stopping anytime soon. So, get onto a gold standard, and, whether or not you are working hard to make ends meet, or whether or not you've worked hard all your life and you have savings and you have money and you want to make sure that that is protected, the value of that is protected, then, you know, get onto the gold standard as quickly as you can.
Yeah, it does make a big difference. And I think you got some exciting news as well, Jason. I think somebody's coming in with an investment to you guys. Talk a little bit about what's happened there.
Yeah, so I'm really pleased to announce that one of the world's biggest producers of gold, a company called 𝙎𝙊𝙇𝙬𝙍, which is listed on the Johannesburg Stock Exchange and also the New York Stock Exchange, where I was actually just last week for an interview. They've invested in Glint, and it's a fantastic endorsement from my perspective of the gold industry getting behind fintech and getting behind Glint. And seeing that, you know, gold does need to be maintained, the relevance of gold needs to be maintained, and the relevance of gold as money needs to be firmly put on the agenda for most people. And so I see that as a really positive message to the market that, you know, the gold industry now is getting behind fintech and getting behind Glint, so that we can bring, you know, gold as money to everyone, not just the few who know about us. I mean, what it does for us, it enables to get the message out, because unfortunately, you know, Glint is probably one of the world's best kept secrets, but now with some of this funding, we're able to kind of get out there and raise brand awareness. I think the other thing is that they're very focused on ESG, environmental and social governance. So everything that they're doing has a very strong focus on that, around sustainable mining and you know, lowering carbon footprints. And I think there is the possibility of connecting what they're doing with Glint at some time in the future.
It's interesting that you mentioned that. I was out at a mine site in Mexico last week, and we were talking about this very thing. What the ESG movement has done for mining. You know, a lot of the mining has gotten a lot cleaner. People don't know that, though. You know, much, Jason, like they don't know how to get access to gold. They think that the miners are all bad and do bad things, but they don't realize how much that they've done for the local environment, cleaner mining practices, investing in their local communities. And when I go out to these mine sites in Mexico or the US or Canada sometimes, you know, you get to see how much of an impact it has on not only them doing a cleaner mining, but also on the local community and how much time they spend on really developing that. And it's good that that's happening, because I think the millennials are going to be the next power generation, going to have all the money here in a few years, are going to be looking at that very closely as to what companies are doing. And they invest when they believe in the product, and it has to have a social tie-in to it. Studies show that 85% of investment from millennials has to have a social tie-in. So it's good to see that, you know, you're getting investment from a company that does consider that important. And tying back to technology, it's important also for the younger generation that we tie in technology, because that's what they use. They use their phones, you know, they're mobile, they like technology. So if you're talking about, we all like to hold gold in our hand, but if you're talking about access to this new market, this young market, it's really the ability to do it wherever they are. And you guys have provided a solution, a very easy but a very elegant solution to that.
Yeah, thank you.
So happy to talk more about the economy. I know, you know, as we go in later in this year, Jason, we've got high inflation. The Fed has talked about raising interest rates. And Bullard, who's a St. Louis Fed governor, wants to raise up to 1% by June, July. Have you heard the same thing coming out of your bank over there across the pond? Are they talking about inflation? Are they talking about changing their rates as well?
Well, of course, you know, we're always being fed the message that they want us to hear. And of course, when inflation started to rear its head, then it was all the word on the lips of most policymakers was transitionary. It's this transitionary inflation. And, you know, I didn't believe that for 1 second. How can you possibly print 20 to 40% of your money supply in 2 years and only have transitory inflation? In fact, the word inflation used to mean the inflation of the monetary supply, the inflation of the amount of money printing, and the result of it was cost of living went up. That was the kind of outcome after printing money, after inflation. Now, of course, they conveniently kind of obfuscated the word inflation, disconnect it from the money printing element and just trying to apply it to the cost of living. Because again, the phrase cost of living is really the kind of term which I think most of the people I speak to use. Inflation is a more of a technical phrase. Quantitative easing, again, is another technical phrase instead of just money printing. If you use the words money printing and the increasing cost of living, then the effect or what's really going on, I think, is a lot more apparent.
So, yeah, I agree with you. And it's kind of scary because I feel like they're between a rock and a hard place. I've had people come out and tell me they're just going to let interest rates rise. That if they let the interest rates rise, it doesn't hurt the wealthy as much because, one, they can sell their investments, but two, a lot of what they own. I mean, when you have $100 billion and then it's 50 billion, are you really losing your quality of life? Not really. What it tends to do is it tends to affect the lower and the middle classes a lot more. So some people believe the Fed won't raise interest rates. I think they're going to try it because I think Powell is the guy that wants to do it. I think he's different than every other Fed president dating back to Volcker. I think he's going to do it. I think the wealthy will come out okay. I think it's going to be everybody else that gets hit. And so I think if you're not saving in gold and silver and you're not looking at some of these alternative investments, now you may want to start doing it because once that inflation genie's out of the bottle, they can't put it back in. I don't see inflation going back down to 2 or 3% anytime soon until they flush the system out of all the excesses. It's sort of that Austrian concept where you got to flush the system out of the excesses and kind of reboot it, so to speak.
Yeah.
So I don't think in the near future, it's going to get any better. And I think now is the time if you want to do your gold investment. And I've been saying that now for about 6 months. Do your gold investment now, because based on the data we're seeing in the economy, it's not going to get better before it it's not going to get better before it gets worse.
So, of course, one of the issues is that the word inflation actually means the increasing money supply, the inflation of that money supply. And the effect of that increased money supply is the increased cost of living. And they're very conveniently now making sure, using the word inflation for the increase in the cost of living. And so that for me, yes, there's lots of things around the supply chain issues that have come up during COVID, but you can't print 20 to 40% of your money in just 2 years and not expect inflationary pressures just to build up to unprecedented levels. I think that there's only two options really for them. They either put up interest rates, but if they do that, they're going to hamper the economy. The economy is running off this crack money, this crazy money that's been pumped into the system, and without that being turned off, we're not just going to have a taper tantrum. But something much worse if interest rates also go up, and that additional burden on businesses. At the same time, if they don't put interest rates up, then the inflationary pressures are going to keep on increasing. And God forbid we could end up with hyperinflation, or worse, a situation where the economy isn't growing and we have hyperinflation. In other words, they call that stagflation, which is even worse. Either way, I can't see a good outcome out of this. And as you say, yes, if you want to get involved in your own personal gold stand, do it now rather than waiting until it's too late.
Well, so much exciting news coming out for you guys, and I'm so happy that you guys are having success and are growing. It's good to see that your US team is doing very well. We'll continue to put the word out. I'm a user of Glint and have been for a couple of years. Appreciate you guys providing that option.
Thank you.
I don't see an alternative, honestly, to getting easy access to gold. You can store it somewhere, and that's fine. But when the economy is difficult and you need access to your gold, it can be often, we've seen this with other companies that store it for people, either very expensive or almost impossible to actually get that gold out. And you guys offer a solution that's actually readily available and easy for people using the existing banking system. So appreciate you guys doing that. Jason, we'll have you back on the program again, and we'll talk more. Appreciate having you on this time.
Thank you very much. I really appreciate it.
So if people want to contact you for more information about Glint, how do they go about reaching you?
Well, the easiest thing to do is go and look at our website, which is GlintPay.com. Or, of course, another easy thing to do is just go to your favorite app store, whether it's Apple or the Google App Store, and just download the app and register. It only takes a few minutes to register. You can be up and running and have your gold, your account funded and gold purchased straight away. As you said, with Glint, you're buying allocated gold. There's no unallocated gold there. So it's there's no kind of... There's not the kind of liability risk that you get when you're buying gold that could be, for all you know, being lent out to somebody else. So I think that's a really important side to what we do. On top of the unprecedented liquidity, we bring it, of course, as everyday money. But yeah, the website glintpay.com or the App Store. Download it and register. It doesn't take long.
All right. Thank you, Jason, so much.
Thank you.
Hey everybody, this is Robert. Thank you so much for watching that video content. I have a couple of quick announcements I'd like to share with you as we head out of this video. Also wanted to remind you, you can find us on goldsilverpros.com. We have a free newsletter. If you click here and enter your email address, we'll send that out every Monday to you, as well as we have special precious metals deals with leading bullion dealers here in the United States. If you click that button, you can go here and click on either Miles Franklin or ARK Silver and get the best deals in the business. Once again, thank you guys so much for joining us on the channel. Until next time, this has been Gold Silver Pros.